With the housing market correction in full swing, the big question on almost everyone's mind is whether home prices are expected to drop. Mortgage rates are rising, there is growing fear that the country will slide into recession, and inflation continues to soar. However, when it comes to real estate, it's all about location. New Jersey, Illinois and inland California were the real estate markets most at risk if the state entered an economic downturn, according to real estate data firm Adam. New York and Chicago were particularly sensitive. Most of the markets that are at the highest risk tend to have higher unemployment and tend to be the least profitable markets, says Rick Sharga, Senior Vice President of Market Intelligence at Adam. We are not suggesting that any of these metros are in immediate danger of a housing crash. In the event of a recession, these metro areas will have the highest probability of some fall. To arrive at the list, Adam assessed the vulnerability of 575 U.S. counties by looking at the percentage of homes facing potential foreclosure, the share of houses with mortgage balances higher than the property values, local unemployment, and the percentage of average local wages needed to meet home ownership expenses. The analysis assumes that the Federal Reserve's determination to keep raising interest rates to fight inflation, along with other worrisome economic factors, will push the country into recession. Nearly two-thirds of the 50 highest-risk counties were in the metropolitan areas of Chicago, New York and Philadelphia and inland California. Targets include the main city and surrounding towns, suburbs, and smaller urban areas. When you look at the 10 to 15 most vulnerable markets, they tend to be in places like Metro New York and Metro Chicago, where you have limited affordability and relatively high unemployment, Sharga says. In the South, the houses are cheaper, says Sharga. And many of the people moving south are leaving high-priced, high-tax states and looking for more affordable properties, to help block these markets. They also have very, very strong employment.